Hello, this is Jacob here again with Small Business Chat. Joining me once again is Matt Swires. Matt, how are you doing today?
I am over caffeinated today. How you doing?
I'm doing great as well. Not as caffeinated. I only had one cup of coffee. Sometimes when I have two cups of coffee, my eye starts twitching. So, uh,
Then my by your standard, my entire body's twitching. But let's keep this PG. Go.
right?
Yeah.
So today, everyone, we're talking about financial management for a small business. We're gonna provide some, practical tips and advice for small business owners for managing, financing, securing funding, and long-term planning for financial stability is what we're talking about today. So, without further ado, let's start off with our first topic here: how to create a budget. So, you want to develop a detailed budget outlining your projected income and expenses. This will help you understand your financial situation and also make informed decisions. You want to, regularly review and adjust your budget as needed based on, actual performance and changing circumstances. So, Matt, why don't you take that topic away and discuss with everyone how to create a budget?
Yeah, and so one of the most important things that you have to do when you run a small business is understand how much money you have and and be able to project to some degree how much you're going to need, what's coming in, and are you going to be able to pay your bills, etc. And as you said, it's budgeting 101, right? And so what, we recommend to everyone, that comes, to the trademark company or otherwise is, create that budget at a minimum. Use Excel if you're, using Microsoft Excel, and you can create a list for you, and you know what your revenue is expected to be, what, all your expenses are supposed to be. And as you can guess, right? I mean, you have a home budget, right, Jacob?
I do. Yes.
Yeah, exactly. And so you need to make sure that your what money's coming in is going to cover what money's going out. Pretty simple. And such. So a great way to, on a really simple way to deal with that. I mean, technically you could just have a piece of paper, but put in, all of your income on one side, all of your expenses on the other side, break it down into categories. And you can start off with something like Excel. As you develop and get a little bit bigger, I highly recommend using QuickBooks Online for small businesses. We're not getting any recompense payment or kickback to recommend them. I just know for a fact that they are fantastic and very user friendly for small businesses. And then the added benefit, if you keep all your businesses or excuse me, all your income and expenses going through QuickBooks, then at the end of the year when you go to do your taxes, they've largely already categorized everything for you, so it makes it very easy to file your taxes every year. You use QuickBooks by any chance?
I do not. No, I don't use QuickBooks. The
How do
most
you guys
I've
do your
heard,
home budget? Is it just the standard, she gets
Mint.
everything and she tells you what you can spend?
Yeah, we use.
Gotcha on that one.
Yep, yep. I mean, it's more we use Mint. I definitely am more of the, don't say anything to Destiny, but I'm more of the budgeter of the family. So we definitely, we look at our expenses. We have our bills all written out for our month, and then we kind of, Destiny, goes to go grocery shopping once a week, et cetera, and other things we kind of plan on throughout the month. But yeah, the most we use is Mint just to track exactly what where our expenses go towards. And it's actually a really smart app that you should, this is not a sponsorship video, but you can actually go on there and you can literally type in all of the expenses and where they go. Or you can hook up your debit card to the app. And once the debit card's hooked up, it'll basically track it for you and it'll tell you exactly where all your money's going and how to basically do better with your finances.
Which app is that, by the way?
Called Mint.
Oh,
MINT.
it's Mint. Okay. So
Yeah.
you actually use Mint. See, I've always been terrified to use them because you connect them through accounts, but remember, I'm 53. So I'm thinking people are going to steal my stuff. You think it's completely secure? Like
Oh
it's
yeah,
good?
I've been using it for years. I use it pretty much every week.
Okay. Yeah, because I mean, because it's because but well, I mean, yeah, everyone knows my financial story, or a lot of people know my financial story at this juncture. So when I first tried to use Mint about 5 or 6 years ago, I signed into the app and it just started laughing at me, and it was very offensive. And it's like I'm sorry, we don't go down that deep into debt right there, but fortunately, you've clawed your way back, and I'm doing fantastic now. But I don't know, I've always been a little bit scared to just put in like all of my financial information into one app. But again, I'm guessing they wouldn't have a business if that was a problem.
Yeah, true. I mean, yeah, I mean, I can definitely speak for them. I've been using them for years, so it's very easy. I mean, all you do is just set up the account and then you just hook up your debit card. And it literally does everything for you. So I mean, you
Oh
can
wait,
also, what's that?
yeah, I just hacked into your account through Mint. Yeah, I got you. Yeah, oh yeah, you guys are doing fine. Good for you. Good for you.
Right?
Okay, I'm sorry. I'll stop being so slapstickishy.
Oh no, that was fine. I think it shows how easy people are to hack. You already got my information.
Yeah, I already got your information. And by the way, those pictures are phenomenal. Good for you.
Oh yeah. Awesome, Matt. Well,
Yeah,
do you have anything else to talk
yeah.
about with
In reference to budgeting, and one of the things is, and it's the old rule, what is the old adage? A bird in the hand is better than two in the bush.
that? I think
Um,
that exactly. Yeah.
Yeah, thank you. And so one of the other things that I've learned running businesses over the last, last 2 decades now, actually a little bit more than 2 decades now. I'm old. Anyways, but one of the things is just, budgeting is not a time to be a dreamer. You need to be realistic in your budgets. And we all think that that next service or that next product is going to hit big. And I can't tell you, and you've been here with me long enough to know that a lot of times, probably the most of the times we roll out a new product, they don't hit nearly as big as we think we're going to, they're going to hit. So you need to use like verified history and statistics in setting out those budgets so that this is a realistic expectation of what I can really, I think it's going to come in. Hey, we all want to hit the lottery. We all want to roll out that next product that, sells 1 million units inside of a month. And your biggest problem is how do you actually, satisfy all those orders? But until that happens, don't count on that in your budgeting. You've got to be more conservative. And I'm not talking politically, I'm just talking in regard to your numbers. You've just got to be more conservative vis-a-vis what historically you've put in and what you're likely to put in next month, the month thereafter. So again, that budgeting thing, it's not a time for being a dreamer. It's a time for being a realist, right?
That's actually really good right there that you said that. So I think it's important for people to know, especially with people who don't want to face their finances and admit either defeat or success. They just don't even want to look at it or even bear it. So they just kind of go off willy nilly, spending all kinds of money and putting money into sort of all these different places, and then at the end of the month, they're like, "Where did my all my money go?" So. So what? So
One of the things that we are going to talk about is managing finances in general. I'm sorry, I hope you don't mind me springboarding on that
yeah,
because
go
when
for
you
it.
said, knowing where all your money is, and I think that's one of the most critical things, that, I could say. So a couple of years ago, if people aren't aware, I had a marriage that didn't quite make it. And so, and when you go through something like that, at the time, obviously you can imagine it wasn't the greatest time in your life and all that sort of stuff. But on an aside, the business wasn't really doing that great as well. But so one night I sat down and I said to myself, maybe I haven't been the best financial manager of all time and all that sort of stuff. And I committed that night as I sat there and on my laptop doing a lot of the things we're talking about today. And I was like, I know where every nickel that I have, I don't, if it's personal, if it's business, anything like that, you as a young entrepreneur, as a new business owner, you need to know where every dime is and where's it going and such. And you have to get, in my opinion, fanatical about that and such. And then just on an aside, you say, well, you bury it here. You mentioned something like, putting around here. I always joke around with my kids about this. I'm just like, your mom is basically very, straight line, all that sort of stuff. So when she leaves this world, you probably just have one account to look in and there it'll all be. With me, it's just like you're gonna have to find a treasure map and there's gonna be like $5 here, $27 here, buried over there, and all that sort of stuff. But I know where every dime and nickel is that I have, that the businesses have, etc. And even though they're spread out, you do have to just, keep a track and know every single day where it is. That's, in my opinion, the best advice I can give you on managing your finances. Know where your money is, know what it is, know how much you have, know what's coming in and what those expenses are, right?
Gotcha. Awesome. Yeah, well said. Just some other pieces of information to go through. Matt, feel free to chime in. One of the very first things you want to do, just starting off with being a realist, is gather financial information. So some people go pen to paper, and they just start writing out all of their expenses on one paper. Some people, write down needs and wants and kind of go from there. You want to start off by, collecting all relevant financial information, just some things like historical income statements, expense records, maybe for others like sales forecasts and any other financial information that you have at your disposal. Next thing you want to do is, identify sources of income. Me and Matt were actually talking about this on our last podcast with investing. So maybe you want to identify maybe some sources of investments that you have or stocks that you have that are income for you. You want to list all of them, income for your business, and such as, sales volume, revenue, service fees, any subscriptions that you have, and any other sources of revenue. Next, you want to do estimate, your income. One of the things you can do is based on your historical data, any other forecasts you have. You want to try to be, again, realistic and also conservative with your estimates. Next thing you want to do is list fixed expenses, identify, all of the fixed expenses that remain relatively constant, regardless of, your business's level of activity. This may include, rent, utilities, insurance, premiums, salaries, and loan payments. Next thing after that, you want to estimated variable expenses. You want to determine variable expenses that fluctuate with your business's level of activity, such as raw materials, could be inventory purchases, could be marketing expenses, etc., and commissions, maybe even. Next, you want to, factor in some one-time expenses, maybe irregular expenses that may occur during, budget periods or maybe such as, equipment purchases, renovations, or legal fees. So there's a lot of other things also that you can calculate. And then also you want to start calculating your total expenses for, your fixed variables, one-time expenses to calculate, your total projected expenses for a budget period could be another, some other things. Matt, do you want to chime in here at all? Any other extra steps you want to add so far?
Woo, man, you got a lot in there. No, I'm sorry. Yeah, yeah, I mean, no, I think it's all good information. But I mean, yeah, effectively, pretty much everything that any money coming in, any money going out, categorize it and put it in. And by the way, once again, just throwing a little bit of a shout out to QuickBooks. If you do it in Excel by yourself, you have to create those lists by yourself. QuickBooks gives you the suggestions for you, and it makes you think about things that, to be honest with you, you weren't even thinking about, categories that you didn't even realize. And it'll also help you sort of auto fill those in. And again, another shout out to QuickBooks. So then at the end of the year, they've already sort of, we all know about taxes. They've already sort of figured out, okay, well, that's technically an ordinary necessary business expense, or, it helps you with your deductions because it's already categorized them for you. And that's why it's a little bit more advanced in Excel. So in my opinion, when you're just starting off and you're just opened your first online, whatever, and you're some, business, it's cool to do it on Excel sheet. It's always actually cool. I mean, honestly, I still to this day somewhat budget on a piece of paper when I'm looking at things, in the long term. But then ultimately, it should make its way to an Excel, and definitely should make its way back into QuickBooks to assist with that, that big long list that you just basically, mentioned, and such, and rightfully so, right?
Gotcha. Okay. Awesome. Yeah, that's good there too. And also, Matt, I had a good question for you since, we're both intertwined with
Peppercorns?
others.
No, we're not.
Intertwined with exactly intertwined with, others, me and my wife, and then you and your fiance. You got to sometimes separate personal and business finances from each other. You obviously owning your own business. Maybe we can talk about that next of how to kind of separate business and personal aspects and how they intertwine with each other. Why don't you talk about that a little bit?
Well, yeah, I mean, so the importance of basically keeping, so you talk about actually like, how do you make sure your finances for your business and your personal finances stay apart?
Yeah, exactly. Like for an
Yeah,
example, some things people you want to start off with is opening maybe a business bank account, choose a
yeah, I got
reputable
you.
bank or something to, open up that bank account with. Do you do that at all? Is that something that's
Yeah,
part of your strategy?
I got you. So just taking a step back, just real quick. So remember, with the when you open your own business, you always want to have it under like an LLC or a corporation. You never, ever, ever want to do it as a sole proprietorship. You want to have that separate entity formed with your state, most likely. that creates a separate entity through which to run the business. And then that allows you to open up a business banking account. Now, why is this important? Um, Honestly, it's part of the whole liability shield for you. And so, it's one of the things that so always keep your personal money in your personal bank account and keep your business's money in the business's bank account until, of course, it's time to make a distribution or pay yourself a salary or something. But then that goes one way. Then you take it money out of your business account and put it in your personal. If you start effectively, it's a nasty word in almost all contexts, commingling funds in like, so if you use basically your business account as your personal account or your personal account as your business account, that's one of the ways that attorneys, should you, God forbid, ever have to deal with one of those people, can basically come in and show that you weren't following your company's procedures properly. And it's this nasty term, it's called piercing the corporate veil. And so it literally breaks down that shield of liability against, it's the whole reason why you have an LLC. And one of the major factors they look at is, well, whether or not you actually commingle that money. Are you just using that bank account? Are you using a personal bank account to fund your business, vice versa? Is that business's bank account just your personal piggy bank and things of that nature? So when you talk about keeping things separate, like again, I think once you get married, most people combine their finances. Are you and your lovely wife, are you combined yet?
Yes, you are joint. Yep. Hmm.
You're joint, yeah. So what's the old joke on that one?
Ball and chain.
What's yours is mine, and what's mine is yours, or something.
Yes.
What's mine? No, it's mine. So what's mine? It's basically what's mine is yours. I'm messing it all up now, but anyways, it's all hers once you combine it. But anyways, again, so and so, but right now, with my relationship or whatnot, we're starting to have those conversations and figure out how you actually do combine them on a personal level. But then from a business level, you just simply never have that conversation because it always remains separate. Because once again, if you're running a store and someone slips and falls in your store, you want them to be able to sue the LLC, but not get to your personal bank account. And the way you do that is you've got to separate it like oil and water. This is my business account. This is my personal account. Keep good records of your business account. It's okay to basically pay yourself. It's okay to transfer money even for a profit distribution. What you can't do is just go down to the local Piggly Wiggly, buy groceries on your business account for yourself, fill up your car with gas, or just use it to pay your kids tuition or whatever it is that you need to do. You've got to first do a distribution, and then, because that'll keep the lawyers at bay, should, God forbid, you ever, like I said, meet one of those folks. Hopefully you don't, but sort of like swimming in the water, eventually you may get hit by a shark, and you may get hit by a lawyer if you're going to have business. It is what it is.
That was actually perfect the way you put that.
Oh
Uh,
yeah.
so one of the things I wanted to discuss with you, and I think it was when you were talking about, dang, when I just lost it.
Okay. By the way, I have lawyer shark repellent if anyone wants to ever hear a podcast on that.
Oh, you do? Okay.
Yes, I have it. I'm going to keep a secret for now, but I have a tried and true method of making lawyers not want to basically come after you. But I'll bore people with that on another podcast. Maybe we'll tease it up.
So
And
you
it's
want to
worked
make
very
that
well.
one of the titles for?
Yeah, well, I actually think, to be honest with you, I think one of the other things we should deal with in a future podcast would be, again, the legalities of a small business and how to basically insulate yourself away from lawsuits and or what to do when you have a lawsuit or something, because these are things that people don't realize are very important. And again, I can share my strategies on basically how you become effectively very unappetizing for a lawyer. And in short, so when someone says, "Hey, I want to sue," I want to sue that business over there, it's very difficult for them to find a lawyer to actually do it because you're just very unappetizing as a business. What's in it for me, aside from billable hours and such? So there's tried and true methods as a former trial attorney that you can actually do that actually do work to make your, basically unappetizing to attorneys and such. But that's for another thing. So what did you get back to it? Did you remember or did
Yep,
I talk you
yep.
out of it?
Nope, nope. I remembered it.
Okay, what do you got?
So you were talking about LLCs and how if you put your all your information underneath of an LLC, your business has underneath of an LLC, that anything that happens to you is all happening to the LLC. We actually use that a lot. In case anybody's listening in regards to trademarks, or is in the trademark field, or has a business going through trademark application, et cetera, that we actually tell all of our, well, we can't necessarily give advice, but we give generally the case scenario. If somebody asks us, what should I put it underneath of? Should I put it underneath of my name or an LLC or corporation? Generally, we tell our customers that most people do put their ownership underneath of an LLC or business formation as in a corporation, because if there's anything, any sort of ownership change, or if there's anything that happens with the trademark or the business's identity, then it will all happen to the LLC or the corporation that was formed under, not an individual person. So that's all true. Matt, what do you think about that? Is that all accurate?
Yeah, yeah, exactly. So like we always say, like in general, right? It's more intelligent to hold honestly all property that you own in a separate LLC apart from you. Now, if you really, I mean, and I'll throw, I throw attorneys under the bus all the time, but the reality is if you have the funds to go to a planning attorney, they can actually assist you. Again, shout out to I want to say it's wyomingllc.com, but and such. There's a lot of reasons. I'll let people figure that out, why you set up, LLCs in Wyoming and such. But, you really do want to hold your assets in separate LLCs if you can, because it sort of makes sure that, things are being held separately. And, it's part of the shark repellent for attorneys. The harder you make it to see that you have assets, the more likely it is they're going to move on. But then more likely, but the other thing is when you actually do, if someone unfortunately does bring a lawsuit against you, um, if it's held, in your trademark in an LLC, they're suing the LLC. They're not suing you individually. Whereas, I have horror stories when I, first, opened up the trademark law firm that I had originally, where you would be representing somebody and they would get sued for, false advertising, trademark infringement, whatever the case was, but they held the trademark in their own name. And, it's once a lawsuit is instituted against you, you can't just walk away from it, because then they'll go get a default judgment. And not being too political, that's actually what happened to President Trump in New York. People keep forgetting this. He's trying to defend his case now that now that it was at the damages stage. President Trump and his attorney chose not to basically defend it at the liability stage. So, borrowing from that example, like if you just walk away from the case, someone sues you in federal court, you don't have an opportunity just to walk away from that, especially if you're an individual, because then they're going to get a judgment against you, just like this attorney general did in New York against the Trump organization. And then it's just about basically getting money and enforcing against you. And so you don't have the ability to walk away. Now, let me give you a slightly different scenario to what your point is. Let's just say I simply held my trademark in an LLC, and the only thing that LLC owned was that trademark. So if there is, in essence, some sort of infringement, trademark infringement, they got to sue that LLC. Well, worst case scenario at this juncture is, well, what are they going to get if they win? The trademark. That's it. That's all that's in the LLC. So in general, and it gives you again some shark repellent here, then they're going to have to say, well, no, 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 no. Then they got to go and try to pierce the corporate veil and say, oh, no, no. Well, the trademark was owned by this LLC, but it was being used by this other LLC, this business. Okay. Well, now it's being used by this business. Maybe they pierce the corporate veil and get to that second LLC. But, good Lord, you're putting in all these layers. And then are they ever going to get to your personal assets, your home, and all that sort of stuff? No way. Not if you set it up really well. But again, it all starts with owning that trademark, owning property in separate LLCs. So it puts up these barriers against lawyers just constantly trying to pierce the corporate veil. And by the way, this is all legal. It's just good corporate planning. And again, props out to attorneys. Go to a good asset protection attorney, and they can actually set this stuff up for you very, very quickly and easily.
Gotcha. Perfect. Awesome. Really good information there, Matt. Thank you for sharing that with us. Let's move on to our next topic, which I just had it here. All right, so let's go ahead and plan for a monitor and improve profitability. So, not only do you have to, plan for your financial stability, but how do you kind of put that into action? Obviously, we talked about Mint, we talked about QuickBooks. Is there any other tools that you use at all, Matt?
You're talking about actually like planning for like long-term financial stability, success of your organization.
Exactly.
Yeah, I mean, in a previous podcast, I've mentioned, this book, Profit First, and I know that that was it. There's another, I can't quite remember what it was, but the long and short of it is I recommend for every dollar, like once you have a proper budget, you should be able then to use that budget to realize, okay, so hopefully you have a sufficient margin on your goods or services that you can come back and you can basically say, okay, so I can basically 50% of every dollar that I bring in the door, I'm going to segment into this bank account, and that's going to be used for my operating expenses. And I think that I've seen most pundits that do this line of work or this line of thinking basically does like, they'll say 50 to 60% should go in your operating account to pay for your monthly expenses, right? Then 20%, give or take, should be put away into an account that you absolutely cannot touch for any reason except to pay your taxes. Put 20% away to make sure that you pay your, state and local, federal taxes and all that sort of stuff. And then if I'm doing my math correct, that leaves you about a 10% for a profit account. Okay. So really what you want to do is you want to have, 4 bank accounts. Now, let me just tell you, almost any bank that you go to, I don't care if it's Chase, Citibank, Bank of America, Wells Fargo, there are arguments for why you go to your local bank, but then if you're going to be doing real estate transactions and stuff like that, you probably should go to a local bank. But, one of the big boxes, Bank of America, Chase, Citibank, we've learned over the last 20 years, they're never going to fail. They're very safe. They're always going to have your money, but they're also very easy to basically open up 3 or 4 accounts and have them all linked on your app on your phone, right? And so you should have an income account. That's where all your money comes into. And then that is sort of your clearing account that goes 10% to profit every day, 60% to operating expenses, and 20% tax. Tax, you pretty much just don't ever touch no matter what, with the exception of when you're writing checks to the state, federal government, et cetera, et cetera. Operating, we already went through with that. The profit one is the interesting one. Getting back to your question, this is what you should be able to do. You want to talk about planning for long-term financial stability on the assumption that you have a strong enough business that you can put away 10% in profit, every month. Okay. Right now, because of, honestly, it was Apple that started this war. You can get a savings account with most banks that'll give you a 5% interest yield. Okay. So you want to put away until it hurts, until you basically feel that that 10% and such, and maybe you're lucky, maybe you've got your operating expenses and operating expenses are only 45% of what you take home every month. But whatever you can do, especially when you're a fledgling company, you live on bare minimum, and such, because I'm going to tell you, you're going to sleep at night a lot more when you get that first 100,000 in the bank, that 200,000, 300, 400,000 for that business. And then at the same time, don't let that money sit there. We talked about it before last week, I think it was, which is you make your money work for you. It's another employee. And right now, the bare minimum is get 5% on that money from one of these, high interest, savings accounts. But if you're a decent investor, again, it's what I spend my time trying to learn all the time. How do you spend your free time? Researching stocks, figuring out great alternative investments that aren't necessarily the stock market that people aren't thinking about. Hint, whiskey. But anyways, do you know that's the thing, by the way?
It is.
Yeah, people are investing in whiskey now. It's giving you about a 300% return. This is not a lie. I swear to God,
That's the
I'm
best
not talking
whiskey
like
company
Jack
to go
Daniels off the
for.
shelf.
Jack,
Yeah.
did Jack Daniels invest in?
Oh no, yeah, I separately invest in Jack Daniels. I call that my mental health fund. And unfortunately, I can't resell it because it's usually used. But there's about 10 whiskeys that you can invest in that are giving you like massive returns right now. It's one of the alternative investments you can look up. So I encourage people to actually look up alternative investments, not just stock market and that, but there are a lot of really great financial investments that aren't just putting in the stock market. But again, just wrapping up my thoughts on this is, first of all, be absolutely rigorous in reference to the segmentation of your money. You got to pay your bills. You got to pay the government and their taxes and such, because that, that provides our roads, our streets, our military, our men and women that we're very thankful for, that, keep us safe and basically keep us living in the greatest country there is. But then once you've done that and you hopefully have enough left over in profit, don't be a pig initially until you've got that really nice, comfortable nest egg for the business, and you keep that invested in either alternative investment, all that sort of stuff. And I would always suggest, when you're first starting out, don't play the lottery. Do really conservative, good growth investments that, you just don't want to lose your money that you've worked so hard for. And I would rather have, for instance, a 7% gain a year on the money I'm putting away than a 50% chance of, 12%. Why? Because, I mean, do the math. 50% is 6%, right? So I would be relatively conservative, but then once you start getting up to that really comfortable nest egg, then you can really start saying, okay, well, now 20% of my 200 or 300,000 I have for the company, I'm going to start putting into venture capital, for other companies, something like that. And some of those may hit. And next thing you know, maybe one of those hits, and that, $20,000 investment you made last year, 4,000 went into that venture capital for that little company, but now that is worth itself 100,000 because they supernovaed. Again, money working for money, but this creates that plan for long-term financial stability. Lastly, on that, just like your business, we've talked about it, have a roadmap, have a goal for your planning for your long-term financial stability. Write it down. What are you aiming for? Is it 200,000 in the bank, 400,000? You want 10 million in the bank, whatever it is, and then create those steps that are going to get you to that long-term financial stability. Right?
Perfect. Awesome. Yeah, like I was saying before, even if it could be personal or business, some people write pen down on paper and kind of just adjust and try to, plan out their finances. But the first step of the process, and from what I can hear and also myself, is, act on it. Don't just sit on it and just, eventually do it. You got to do it very early on. So
Yeah,
awesome. Awesome. Well,
absolutely.
awesome. Well, I think the last topic we should cover really quick, Matt, which is a good question for you. Maybe you can go back into the original, days when you first started the business, or if you even advise this at all. What about seeking professional advice when you need it? So, do you recommend that certain business owners should go seek advice from, like financial advisors or accountants or business consultants? Do you think most people generally should go out and do that?
Yeah, absolutely. I mean, and thank you. That's, it all depends on your level of comfort. And, I, over the years, have been fortunate because I've had some really great accountants that have worked with me, and such. And, early on established a relationship with, an accountant. And, I think that's probably the first financial person you need to establish a relationship with. And again, not, it could be a big box, account. Like, I mean, I know, once again, I'm going to come back to QuickBooks. I think at different levels of QuickBooks, or maybe H&R Block as well, they actually have like with a subscription for some ungodly amount of money. And I mean it like, like cheap, ungodly, like, $15 or $30 a month or something like that. You can actually jump on like a Zoom call with like an accountant who will answer your questions real quick. But for small businesses, what an accountant is going to let you know, if you have a good accountant, is how many opportunities there are. And again, everyone has to pay their fair share in taxes, but small businesses actually do have a tremendous amount of different, deductions, credits, et cetera, that you're not going to know about. And, an accountant is going to both keep you on the straight and narrow vis-a-vis what you have to pay in taxes, making sure that all your forms are filed properly and all that sort of stuff. But then again, hopefully helping you with some, credits and all that sort of stuff. By the way, on an aside, I encourage everyone to like search YouTube every once in a while and search like small business tax credits, small business deductions, because there are a lot of people out there that put some really great stuff out there, and you may not know how to exactly to apply them. But when you have an accountant, you say, "Hey, have you ever heard of this research and development credit thing?" That, whatever. And then your accountant may be like, "Oh, why do you do that?" And you'd be like, "Yeah, that was, 50% of my salary last year." Bada bing, you may be able to actually deduct that if certain things are permitted. But so I think the accountant is one. I think as you get a little bit more advanced, if you don't want to be bothered with the actual financial stuff, I think financial planners have a place, and possibly an actual broker has a place for things. But definitely at a minimum, the accountant, everyone, and this is literally no one should not have an accountant on their side as you're starting a small business, because they will keep you out of trouble vis-a-vis, filing things timely. The amount of forms alone, Jacob, that you got to file for, between state and federal taxes and all that sort of stuff. Yeah, and they stay on top of it. Find an account that will charge you a reasonable amount of money because they're going to charge you to do it, but it's far less than penalties and all that sort of stuff if you don't get your stuff filed on time. Cool.
Gotcha. Awesome. Way to close it out, Matt. I think that'll wrap up another episode of Small Business Chat. And obviously, we talked a little bit about investing, but today again was more about financial planning and everything you need to do with your business. So we found out today's discussion of for managing finances. A lot of insightful stuff we talked about today. Before we go, let's recap some of the key takeaways for today's episode. Some of them being creating a detailed budget, helps you understand your financial situation and also helps you make informed decisions. Also remember to separate your personal and business finances to maintain clarity and compliance with tax regulations. Obviously, since taxes are coming up here in April. Or Matt, are taxes like for even businesses still all due for April, or is it any other month, or is that I never obviously asked that question before?
Yeah, generally speaking, actually, corporate taxes are usually due March 15th, or
Okay.
thereabouts, depending if it falls on a thing. And then personal income taxes are usually due April 15th. Um, there are it's relatively easy, by the way, in case anyone's ever interested, to get a 6-month extension on both. You do have to file and have it granted. But there's a service. I can't remember what it is, but it's basically it's like a tax extension now or something like that, and that's what they specialize in. And you can get a 6-month extension, so you get to basically September and October respectively, just by doing just a quick form online, and they'll get your extension approved very quickly. So I mean, again, if you owe, that's the one challenge. And just by the way, there are caveats that they'll tell you more. So you can get the extension real quick. They're normally due March and April. I personally prefer always to do a 6-month extension. But there are, just know that doesn't absolve you of having to pay your tax liability if you have tax liability while you're waiting just to file the actual final forms. So I think there's something in there that, like, well, if you happen to owe like, $5,000, technically I think you have to file that with them, give them the money, and then you can file your tax returns later. But I never quite understand. But if you're just asking for a refund, I don't think you really have to worry about it. But yeah, that's when they're generally due.
Gotcha. Awesome. Thank you for covering that, Matt. Some other things, that we talked about, regularly monitoring, profitability metrics and identifying areas of revenue growth and costs. We also talked about, planning for, again, taxes is essential, to avoid surprises and ensure, compliance with tax laws. You don't want those IRS agents coming after you. Don't forget, to set aside funds as well throughout the year and seek, professional advice when needed is also what we talked about today as well. So, as always, if you have any questions or topics you'd like us to cover, in future episodes, feel free to reach out to us on social media or through our website. We'd always love a new topic or, if there's something to discuss in one of our new podcasts. Like, we come out with a new one every single week. Thank you. So thank you for listening to Small Business Chat with me, Matt, today. If you enjoyed today's episode, please consider subscribing, leaving us a review, and also sharing your podcast with your friends, and also maybe even colleagues. Your support means the world to us. We really appreciate you. Until next time, remember to stay informed, stay inspired, and keep striving for success in your small business endeavors. Take care and goodbye, everybody.